Hey everybody, Boris for BK Forex. Welcome to the weekly technicals for January 9th through January 13th for Euro dollar, dollar yen, pound dollar. Time for chop. It's going to be a big question because after a very, very strong and very powerful dollar rally over the last month and a half, I think volatility is starting to compress a little bit, and we're now looking at a week with very, very little fundamental data to push us around. We do have a couple of talking heads, especially Janet Yellen, on the calendar, and of course we have U.S. retail sales at the end of the week. But at this point, the general theme of U.S. positive economic growth is really starting to take shape. I think the market is pretty much priced in as much as it can the trajectory of the Fed, but there's still enough, I think, of a doubt in the mind of the market as to whether it's going to be 2 or 3 hikes that creates a little bit of a potential for continuous dollar selling. Last week we talked about the idea that the dollar was very ripe for a correction, and indeed it was. We came all the way down to 115, but then just bounced right back off it. And of course, the non-farm payrolls was a very positive boost for the dollar and pushed us right back up towards the 117 level. The critical question, though, is how well we're going to trade in this sort of 17-18 chop. We'll take a look at the charts here, but given the fact that we don't have any further fundamental impetus, we're really going to have to find out if there's going to be fresh money willing to take us all the way out to 120, essentially on the news that's effectively been priced in. I think there's still potential here for dollar to kind of curl over a little bit and come back for further profit taking, especially if U.S. yields refused to take out fresh highs. We did have a big move in the U.S. yields on Friday, but it was from below the 250 level. It's really the 250 level on a 10-year that is going to determine whether dollar yen can take out 120 with any kind of conviction. Having said this, though, it's certainly not a clear dunk fundamentally to assume the dollar is going to correct any further, nor is it really that clear that we have just an unambiguously strong buy point at this point. I do think we're sort of in a very, very choppy environment, and I'd be very, very careful at attaching positions either way as far as trade goes. I think it's important to kind of just sort of watch the ranges rather than assume positions at this time and juncture. Anyways, let's take a look at the charts here and just see how everything sets up as far as the week goes. As I said, there's nothing on the calendar on the European side. There's really nothing on the calendar on the U.S. side until U.S. retail sales. We'll have a commentary from Yellen, but I doubt she'll say anything new. She'll simply say economy seems to be progressing as expected. The really big question of whether the dollar strength continues and whether this whole euro parity trade comes into play is if we have 3 versus 2 rate hikes in 2017. It's quite a long term to sort of see that scenario develop yet. So in the short term, what is happening that I think is fascinating is that from a technical point of view is that we haven't had any further downward price action in the euro. All of the dollar gains have really been made beginning of or middle of December. Those were the lows made. We tested those lows several times, but have since actually moved off the lows. And euro certainly was subject to some very vicious little short covering rallies during the Christmas week season, and it's quite possible that we could get a squeeze further up here. I think it's we'll let these New York City sirens go by us for just 1 second. I think it's interesting, though, from a technical point of view, is that, and this is the narrative that makes me doubtful that the dollar strength could have a lot of juice behind it. The technical narrative is sort of showing actually the bottoming out of the euro for the time being. And we would really need to break well below towards the 104s to sort of resume the whole negative dollar trade at this point. The euro's made 2 steps forward, 1 step backward. That suggests that it probably has more steps forward rather than steps backwards as we look at it on a technical basis. And that is probably the strongest signal that a lot of the dollar move that we've had here since the Trump election has pretty much been priced in. Any kind of a short covering squeeze here, if we, as a matter of fact, it'd be fascinating to see if start of the week we trade back up to the 106s and take that out. If we take the 106s out, it could precipitate just simply a big short squeeze that could take us all the way up to 107s. The 107 108 is clearly much bigger resist point here, but I think that would surprise the market. And in many ways, the surprising trade is usually the more accurate trade, because if everybody's leaning one way, it's most likely that the market is going to take them out in a move that's unexpected. So looking at the technicals are telling me that there's a pretty serious divergence on this whole dollar bullish move. and I'd be careful about getting too long dollars as it stands. Similarly in the yen certainly looks a lot better than the euro. Dollar strength here is more defined. The 115 definitely held. But remember, we talked about the fact that the yen likes to trade in 5-penny increments, right? We take out 105s, 110s, 110s, 115s. When we take out, the upper end of that range, that's a very, very bullish signal for further extension into that range. But what's happening now is that this 115, 120 is kind of distributing. We've been distributing for basically a month. And it suggested that this 117, 118 is going to be very, very critical hold. I mean, it's possible, of course, that we can squeeze out over here. But the much more interesting question, the truly serious question of whether the dollar rally can continue, is if we take out the 1850s. Then you could kind of unambiguously say, yeah, we really are moving towards the 120s, and it becomes sort of a vertical short squeeze. But if we kind of fail over here, then it's very likely that we test 115 before 120 comes up for play. I still think there's potential here for further profit taking in the dollar rally on the yen. And until the 1850 is taken out, it's really sort of more of a sell the rally than buy the dip trade for the time being. Certainly, the technical situation is telling us a more distributive pattern is in play. Lastly, the thing that was, I think, most surprising was the kind of another fake out move on the pound. This, just Thursday, the pound looked really good and looked like it was ready. It was setting up sort of a higher low. Looked like it was ready to kind of burst out. UK data has been surprisingly strong, and I think that was the key thing. And yet Friday just got decimated in the post-NFP environment. And it's hard to say why. I mean, cable still, if you're following it technically, you still have to believe that this is a buy the dip trade because we're making higher lows. We haven't broken this 122, but we're certainly within inches of the 122 level. So I think if you're punting, it's an interesting long here. If 122 gets taken out, it's a small stop, and you just you take the risk and you go away. On the other hand, if 122 gets taken out, it's a very negative construct for cable, and it suggests that we could go all the way down back towards the 120 flash crash tests. It all, of course, comes down to the idea of just whether the market still thinks that Brexit is a calamitous decision for the UK economy, or whether it's actually starting to shrug off the idea, and perhaps the idea that maybe Brexit is, even if it's a hard Brexit, is not going to be a terrible idea for the UK economy. I remain fundamentally a strong bear on this, but looking at this technically, I still believe that the long trade is a better trade at this point. So if nothing else, it's simply because the risk here is relatively small. Granted that the reversal on Friday was a alarming signal, but it wasn't a reversal that completely broke the bottom. And until and unless the bottom is broken, it may actually present itself as a pretty decent value proposition. Still, cable is essentially trapped in this 122, 125 range, and you're basically trading the idea that the Brexit story is not as bad as the market thinks when you're buying this to the long side. I think it's worth a bet simply because the risk rewards here are relatively tight. But I'm very, very cognizant of the fact that if this thing breaks down, that would suggest the market is getting much more concerned about the Brexit impact on cable, and cable goes right back to being a relative weakness story. I think the other component here, and this is something we'll discuss in the crosses, is cable still a relative strength story, meaning that if the selling in cable is done, and if this is now potential for further upside action, then it presents a really interesting trade on the crosses. If, on the other hand, this is just simply a very negative reversal of a fake out breakout, then you can sell cable all across the board. So looking at the crosses, we're going to examine some possibilities on probably both sides of the trade. I think it's going to, at this point, it's too indeterminate to say which way it's going to play. So it's probably going to be interesting to try to trade it from both sides, either relative strength or relative weakness, and see which side wins out. So that's basically how the week shapes up. It's I think going to be a relatively low volatility week. On the other hand, if the ranges do get taken out, if a euro dollar approaches 103.50, if dollar yen takes out 18.50, then it's off to the races, and you have to respect the dollar rally right back again. And all of the skepticism and all the doubts that we hold here for the dollar rally will go right by the wayside. But I still remain relatively convinced that the dollar rally needs a greater pause, needs a greater distribution, and this week maybe yet another example of a dollar losing strength rather than gaining strength against what is fundamentally generally a pretty decent picture. Wish you guys the best of luck, the best of trading. Boris, over and out.